Have you ever wondered what a secured credit card is and how it can help you build your credit? In today's video, we're diving into the basics of secured credit cards, why they exist, and how they can be a powerful tool for improving your financial future. Whether you're new to credit or looking to rebuild your score, understanding secured cards is a great first step. Let's start by exploring what makes these cards unique and why they're often recommended for people starting their credit journey. A secured credit card is a type of credit card that requires a cash deposit as collateral. This deposit usually acts as your credit limit. For example, if you put down $300, your credit limit will likely be $300. This setup helps lenders reduce their risk, making it easier for people with limited or poor credit history to get approved. Unlike prepaid cards, secured cards report your activity to credit bureaus, which is essential for building credit. Let's look at how this works in practice. Secured credit cards exist to help people who may not qualify for traditional, unsecured cards. If you have little or no credit history, or if you've had trouble with credit in the past, it can be tough to get approved for a regular card. Lenders use secured cards as a way to offer credit while minimizing their risk. The deposit you provide acts as a safety net for the lender, ensuring they won't lose money if you can't pay your bill. When you open a secured credit card, you'll be asked to make a deposit, which typically becomes your credit limit. You can use the card for purchases just like any other credit card. Each month, you'll receive a statement and need to make at least the minimum payment. If you pay your balance in full and on time, you avoid interest charges and show responsible credit behavior. Over time, this positive activity is reported to the credit bureaus, helping you build or rebuild your credit score. The main difference between secured and unsecured credit cards is the deposit. Unsecured cards don't require any upfront money, but they're harder to qualify for if you have bad or no credit. Secured cards, on the other hand, are more accessible because the deposit protects the lender. Both types of cards can help you build credit if used responsibly, but secured cards are often the best starting point for those with limited credit history. The deposit you make when opening a secured credit card is crucial. It serves as collateral for the lender, reducing their risk. If you don't pay your bill, the lender can use your deposit to cover the balance. However, if you use the card responsibly, you'll get your deposit back when you close the account or upgrade to an unsecured card. This makes secured cards a low-risk way to build credit as long as you manage them well. Applying for a secured credit card is usually straightforward. You'll need to provide some basic information, such as your name, address, and income. Most issuers will check your credit, but approval is much more likely than with unsecured cards. You'll also need to provide the required deposit, which can range from $200 to $500 or more. Once approved, you'll receive your card and can start using it right away. Not all secured credit cards are created equal. When choosing a card, look for one with low fees, reasonable interest rates, and the ability to upgrade to an unsecured card in the future. Some cards even offer rewards or cash back, though this is less common. Make sure the card reports to all three major credit bureaus, as this is essential for building your credit history. To get the most benefit from your secured credit card, it's important to use it responsibly. Make small purchases each month and pay your balance in full and on time. Avoid maxing out your card, as high credit utilization can hurt your score. Responsible use shows lenders you can manage credit, which is the key to building a strong credit history. Credit utilization refers to the percentage of your available credit that you're using. For example, if your credit limit is $300 and you spend $60, your utilization is 20%. Experts recommend keeping your utilization below 30% to maximize your credit score. With a secured card, this means being mindful of your spending and paying off your balance regularly. One of the most important features of a secured credit card is that it reports your payment activity to the major credit bureaus, Experian, Equifax, and TransUnion. This reporting is what helps you build a credit history. On-time payments and responsible use will be reflected in your credit report, gradually improving your score over time. As you use your secured credit card responsibly, you'll start to see your credit score improve. Payment history is the biggest factor in your score, so making payments on time is crucial. Over time, your positive behavior will be reflected in your credit report, making it easier to qualify for other types of credit in the future. After several months of responsible use, many secured cardholders become eligible to upgrade to an unsecured credit card. This means you'll get your deposit back and may receive a higher credit limit. Upgrading is a sign that you've built enough trust with the lender to qualify for more traditional credit products. Secured credit cards can come with various fees, such as annual fees, application fees, and even monthly maintenance fees. It's important to read the terms and conditions carefully before applying. Look for cards with low or no fees to maximize the benefits of your secured card and avoid unnecessary costs. Like other credit cards, secured cards charge interest on balances you don't pay in full each month. These rates can be high, so it's best to pay your balance off completely to avoid interest charges. Understanding how interest works can help you use your card more effectively and save money in the long run. If you have no credit history, a secured card is one of the best ways to start building credit. By using the card for small purchases and paying your bill on time, you'll establish a positive payment history. Over time, this will help you qualify for other types of credit, such as car loans or mortgages. If you've had credit problems in the past, a secured card can help you rebuild. Lenders are more likely to approve you because of the deposit, and your responsible use will be reported to the credit bureaus. Over time, you can repair your credit and regain access to better financial products. There are some common myths about secured credit cards. Some people think they're only for people with bad credit, but they're actually a great tool for anyone looking to build or rebuild credit. Others believe the deposit is a fee, but it's refundable if you use the card responsibly. Understanding the facts can help you make the most of your secured card. To avoid common pitfalls with secured credit cards, always pay your bill on time, keep your balance low, and watch out for high fees. Don't use your card for cash advances, as these often come with extra charges. By staying informed and responsible, you can make your secured card work for you. Let's look at a quick example. Imagine you open a secured card with a $300 deposit. You use the card for small purchases, like groceries or gas, and pay your bill in full each month. After 6 months, your positive payment history is reflected in your credit report and your score improves. You may even be offered an upgrade to an unsecured card. Some secured cards allow you to increase your credit limit by adding more to your deposit. Others may automatically raise your limit after several months of responsible use. A higher limit can help your credit utilization ratio and further boost your score as long as you continue to use the card wisely. Your deposit is held by the card issuer as collateral. If you close your account in good standing, you'll get your deposit back. If you miss payments or default, the issuer may use your deposit to cover the balance. This makes it important to use your card responsibly and pay your bills on time. Having a secured credit card can improve your credit mix, which is another factor in your credit score. Lenders like to see that you can manage different types of credit, such as credit cards, loans, and mortgages. Adding a secured card to your credit profile can help diversify your accounts and boost your score. The length of your credit history, or credit age, also affects your score. Opening a secured card and keeping it open for a long time can help you build a longer credit history. The older your accounts, the better it is for your credit score, so try to keep your secured card open as long as possible. When you apply for a secured credit card, the issuer will usually perform a hard inquiry on your credit report. This can cause a small, temporary drop in your score. However, the long-term benefits of building credit with a secured card far outweigh this minor impact. Secured credit cards typically have lower credit limits than unsecured cards, since your limit is based on your deposit. However, as you demonstrate responsible use, you may be able to increase your limit or qualify for an unsecured card with a higher limit in the future. Some secured credit cards offer rewards, such as cash back or points for purchases. While these rewards are usually less generous than those on unsecured cards, they can still add value. If you're interested in earning rewards, compare different secured cards to find one that fits your needs. If you plan to use your secured card while traveling abroad, check for foreign transaction fees. Some cards charge extra for purchases made outside your home country. Choosing a card with no foreign transaction fees can save you money when you travel. Most secured credit cards do not allow balance transfers. If you need to consolidate debt, you may need to look for an unsecured card with a balance transfer offer. Secured cards are primarily designed for building or rebuilding credit, not for managing existing debt. While some secured cards allow cash advances, these usually come with high fees and interest rates. It's best to avoid using your card for cash advances unless it's an emergency. Stick to regular purchases and pay your bill in full to get the most benefit. Most secured credit cards do not offer joint accounts or authorized users. If you want to build credit with someone else, you may need to look for other options. However, each person can open their own secured card to build individual credit histories. Secured credit cards can be a great option for students who are just starting to build credit. Many issuers offer student-friendly secured cards with low fees and educational resources. Starting early can help students establish a strong credit foundation for the future. Many secured card issuers offer free credit monitoring tools. These tools let you track your credit score and see how your responsible card use is paying off. Monitoring your credit can help you stay motivated and catch any errors early. If you're unsure about how to use a secured card or need help managing your finances, consider seeking credit counseling. Many nonprofit organizations offer free or low-cost advice to help you make smart decisions and avoid common mistakes. Using a secured credit card can help protect you from identity theft, as many cards come with security features like fraud monitoring and zero liability for unauthorized purchases. Always monitor your statements and report any suspicious activity right away. Secured credit cards can be used for online shopping just like any other card. They offer the same protections and convenience, making them a safe way to make purchases and build credit at the same time. Many secured credit cards can be added to mobile wallets like Apple Pay or Google Pay. This makes it easy to use your card for contactless payments, both in stores and online, while continuing to build your credit. Some secured card issuers provide educational resources to help you learn about credit. These can include articles, videos, and tips on managing your card and improving your score. Taking advantage of these resources can help you make smarter financial decisions. Good customer service can make a big difference when using a secured credit card. Look for issuers with 24/7 support, easy account management, and helpful representatives. This ensures you'll get the help you need if any issues arise. If you decide to close your secured credit card, make sure your balance is paid off. Once the account is closed in good standing, your deposit will be refunded. Keep in mind that closing a card can affect your credit score, so consider your options carefully. Regularly check your credit reports to make sure your secured card activity is being reported accurately. You're entitled to a free report from each bureau every year. Reviewing your reports can help you spot errors and track your progress. Set clear credit goals when using a secured card. Whether you want to qualify for a car loan, a mortgage, or just improve your score, having a goal can keep you motivated. Track your progress and celebrate milestones along the way. A secured credit card can be an important part of your overall financial plan. Use it alongside a budget, savings account, and other tools to build a strong financial foundation. Responsible credit use is just one piece of the puzzle. Building credit with a secured card opens up future opportunities, like qualifying for loans, renting an apartment, or even getting a job. Good credit is a valuable asset that can make life easier and more affordable. Secured credit cards are a powerful tool for building or rebuilding credit. By understanding how they work and using them responsibly, you can set yourself up for a brighter financial future. Remember to compare options, watch for fees, and always pay your bill on time. With patience and discipline, your secured card can be the first step toward achieving your credit goals.